Welcome back. You're watching us here on Chartbusters. Let's get chatting with the management of Patanjali Foods. Remember, the company reported a 4.5% growth in their revenues in the fourth quarter, with margins expanding by about 40 basis points as well. Food was the revenue driver for the company, food and FMCG, that is, with a jump of almost 50% year on year. Sanjeev Asthana, who's the CEO of the company, joins in to discuss the business further. Thanks a lot, Mr. Asthana, for joining in. Always a pleasure speaking with you. Before we just talk about the business and the growth going forward, there was an interesting footnote in your accounts which said that the board has formed a committee to consider the proposal of acquisition of the non-food business of Patanjali Ayurved Limited. So I just wanted to know a couple of things. One, by when are we likely to hear on any development that will take place out here? And what could the revenue potential of the business that you are onboarding here with margin potential be?
So on the revenue potential, I will keep the remarks reserved right now, Mangalam. But on the announcement, you will hear very soon. The diligence is going on. And we're pretty hopeful that, you will see in a couple of weeks an announcement in terms of the, the acquisition part once the diligence is done. And I would say that is going to be extremely EBITDA accretive, very positive, in terms of the for the company's overall consolidation of the FMCG portfolio. But more importantly, we are hoping that the high margin products that it has and, some of the most solid brands in its category, I think would come into the listed entity, which should be beneficial, overall for the investors' perspective, as well as for company's performance.
So would this just be the personal care business, or would this also include some of the Ayurvedic products, medical care business as well? Because what we know of Patanjali non-food, which is not part of your listed entity right now, there is Dant Kanti, there is of course the soap business that you have, the shampoos business, the wash business. Is there anything else that would be added, or what is it that would be added according to you?
So all the categories: home care, personal care, dental care, skin care, and there are some very solid sort of brands and products there, which are extremely receptive, well received by the consumers. So the entire portfolio is going to move, once if we go through the diligence, and the acquisition happens.
Is there a ballpark figure that you can share on the revenue potential, Mr. Asthana?
It would not be fair. I think that's an unlisted entity that diligence is going on, but just wait for a couple of, but it's a large business. It's a very large business. From the numbers that we see currently, very profitable. So I think just be patient for a couple of weeks. You will soon hear from us.
Yeah, we'll definitely be patient for a couple of weeks. The only thing that's piqued my curiosity right now is because the last time you joined us, you said that the revenues that you see for the company would be close to around a little over 35,000 crores, and for the group would be about closer to 50,000 crores. So the delta here is 15,000 crores. I wonder how much of that is the non-food business. Is it fair to say, is it 50-50?
No, certainly not. I don't think we'll have that size and scale which will accrue. So broadly, revenue is a reflection of the prices where we have on the commodity portfolio. So this year, for example, our revenues have been in general, pretty flat because even though the volumes went up across the board and in the business, but because the price points were lower, especially on edible oil, where we saw a significant decline from the price point per ton, which is why you're seeing lower values. But our margin profile, etc., will certainly keep getting better. And once the non-food part sort of comes in, as and when that happens, you will see a significant addition both to the bottom line as well as to the top line.
Okay, let me just write one this way again. Food and FMCG currently accounts for 33% of your revenues, right? This is in your current mix of things. Once the non-food business comes in, then how much would food and FMCG account?
So I mean, you're forcing me to give a number right now. It's available. It would be wrong on my part to be sharing that numbers. I think suffice it to say, from an FMCG perspective, that's a large number, and and high margin business also. So you will see a sufficient accreditation. I think I would imagine that at least on the FMCG portfolio itself, we should add good anywhere between 35 to 50% addition to the FMCG portfolio.
We try, Mr. Asthana, to get numbers out, but in your P&L, you mentioned that your finance costs had gone up significantly. What would you attribute that to, Mr. Asthana? Because there has not been a proportionate increase in your debt, but the finance cost has gone up significantly.
No, this was, just an accounting treatment to the redemption of preference shares. So we had almost nearly 92 crores of preference share redemption. That is the reason the finance cost is showing higher. And so that's it. I mean, there's absolutely no other sort of charge and no debt increase, etc. So that's purely an accounting sort of entry, which is showing a higher cost.
Let's get the regulation questions out of the way then. What is the kind of revenue volume growth that you're targeting this year in all your segments, and what are the kind of margins that one should expect?
So typically, I'll just run through those. So I think on the FMCG that we've already mentioned that we want to maintain a growth rate of anywhere between 8 to 10% on the revenue side. The margin construct we want to maintain between 16 to 18%. We are pretty much on course for that. The foods portfolio has been very positive. The configuration of the food portfolio, which we were just doing on the investor call as well, undergoes the mix changes. So this year we had a higher proportion of the staples portfolio, and the premium portfolio also continued to grow. But broadly on the FMCG side, you should hear from us that we are nearly 10,000 crores now. We are expecting that we should see a 10% plus growth in this year on the existing business, not the new business that will come into our fold. And on the edible oil side, we had the growth in volumes of nearly 13%. But on the revenue side, we saw the price point decline by almost 25% because the edible oil prices came down. But we expect that the growth in edible oil will taper off closer to 6 to 8%, compared to the country's growth of 2 and 3%. So broadly, I think compared to 31,000 odd crores of revenue this year, we should see closer to about 35,000 crores next year, not including the new business which will get added to the company in the fullness of time.
Very quickly, Mr. Asthana, due to paucity of time, but has there been any impact on the business because of the issues that Patanjali Ayurved has faced when it comes to the Supreme Court?
None at all. In fact, if at all, quarter four has been very positive for us when most of this issues were getting discussed. So largely completely untouched. And that also should be a thing of the past very soon. So I think the direction is positive, and we are pretty hopeful that all of it, will be passed behind us. But on the business front, we see virtually no impact at all.
That was an important question to ask, largely because, now some more brands from Patanjali Ayurved would be coming into your fold as well. But do you have any internal measure of the metric of brand structure, brand strength right now, which may have taken a dent, if at all?
So just to clarify, in terms of the brands, that perhaps are being alluded to, are typically these are all Ayurvedic medicines, which are not, at all either in the mix of, the businesses that we're evaluating, nor it has had any impact. So pretty much on the non-food, those are, the Ayurvedic medicines that are under discussion. And almost no impact on either the sales or the, the imagery or the consumer response. Nothing, not one bit on our business.
All right. Thanks a lot for joining in and giving us that update. One would have thought that even though the businesses are different, the brand name together may have had some overlaps here and there. But take your point out there, and we will be awaiting. Hope to speak to you as soon as you, bring the other businesses into your fold in a couple of weeks, as the management is saying, Hormaz.